you've probably heard many times over that you should start investing early, and especially in the stock market, since you can basically begin to invest at any point. Now, this is definitely the case, and it couldn't hold more true. And the reason for that is that the most powerful thing in investing, and what will make you more money than anything else, is time. Time is the most important thing in investing. All you have to do is invest money and be patient, and you will get rich eventually. And the sooner you start on this journey, the better. Now, I think it was Einstein, don't quote me on this one, he said that the most powerful force in the universe is exponential growth. When something grows at a percentage every day or every week or every year instead of a set amount, because eventually it will just get out of control. And that's what stocks do. They grow accumulative and exponentially. And exponential growth will start off slowly, but then it will grow faster and faster and faster until it completely takes off. So let's take an example. Now, I started investing when I was 20, so let's go with that. Let's say you invest $10,000 when you're 20. So a fairly big amount, but if you have summer jobs, you'll easily be able to save up this by the time you're 20. Now, the stock market on an average goes up 10% every year, which is a lot better than the 1% in interest or whatever you get in the bank. So 10% every year, $10,000. Nothing added, nothing taken away, just $10,000. By the time you're 25, this $10,000 will have turned into about $16,000. 16,100 to be exact. Now, might not seem like a lot, but in 10 years, this will have grown to about 26,000. $26,000. Now, you can see how the growth, it goes faster and faster and faster. Now, in 20 years, it hasn't just doubled the 26, it's gone up to 67,000. 67,000. Now, you can see that the growth is really taking off, and every year it's growing quite a lot faster than it was in the beginning. Now, by the time you're 50 years old, so you're still not in the coffin, you can still travel and spend some money. By the time you're 50, $10,000, $174,000 after just 30 years. You know, now you would think that after 30 years, $10,000, so in 10% times 30 is 300%. You would think that $10,000 would be 30,000, but it's more than 5 times, almost 6 times as much. Now, put a dividend on top of this, just a 2% dividend. Let's say it's a blue chip stock or an index fund. You end up with 17,600 after 5 years, 31,000 after 10 years, 96,000 after 20 years, and 300,000 after just 30 years. That's just with a 2% dividend, so that's 12% every year instead of 10. Now, another reason to start investing early is also that you probably have a job and you don't rely on income from your stocks like someone that is retired. So you can invest in growth companies and just let them grow for many, many years. You don't have to make money tomorrow or next month or next year. You're still young, you have a job. You can just invest in companies that will maybe be big in 15, 20 years. So you really have time to let your strategy and to let your plan play out. If you're 60, you're probably going to end up putting your money in dividend stocks just to get a paycheck every month or every quarter. But when you're young, you can put all of your money in stocks. You can put it in Tesla, Amazon, Netflix, all these crazy companies, and in 15, 20 years, you're going to be rich. And keep in mind, this is just the initial 10,000, no additional investments. So do as I did, get invested early and get rich quickly.